presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the #1 market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. I hope you all had a fantastic weekend. Of course, a little shaky in the market today. First thing I want to say, this is on behalf of our producer, Al. He's the one who makes all of this happen with the audio and the visual. I guess a singer, Roberta Flack, had just passed away today. I believe at 88 or 83. Regardless, if you get in the den, this is one of the really cool things that Al does in the den, is before programming, so before Tommy's show at 9 a.m. Eastern time, he will play, we have a bunch of music playing, and it's very good. Al has a great taste of music, very calming, maybe a little bit energetic depending on the day. So now's a better time than ever to go to TFNN.com, go to the services tab right here, and you can check out the Tiger's Den trading room. That is for $1 a year. The only reason we do that is just so we can keep everybody safe. We know who's in there, and yeah, it's a really good deal. But yeah, get in there before 9 a.m. Eastern time and listen to what Al has planned for you. Let's take a look right now. Okay, we're recovering a little bit, at least in the general indices. Let's get on and I will be the first to say that in the futures were green. I was right for a moment and then became not on the open. I thought the sell-off on Friday, nothing had really materially changed in a major way. You had futures going a little bit green last night. And of course, we sold off pretty heavily today. We traded to a low of 596.49. We've recovered a little bit since then, almost reaching about 602, but we're trading right now below that 600 level. Trading at 599.60, that's in the SPY. Yeah, the composite off about 0.61% at 19,404.89. You get the Dow Jones Industrial trading about 0.4% at 43,602, with those Russell futures off about 0.16% at 2,195. I think really, what's going on here is, one, you have massive earnings this week. Okay, so we're taking a look. Really, the big one that we're all looking forward to, more or less, is NVIDIA. That's going to be on Wednesday. That's after the close. But you also have Kava, which I think will be quite interesting. I think Kava has a good argument for a very solid quarter, right? And again, I'm using the same kind of logic that we were using with Coca-Cola, which ended up being proven correctly, which is using analytics right online for searches of these companies, whether that's on Google, instances of people posting about it on like Twitter or Facebook, and then people that you hear kind of in your daily life. Kava, again, is very attractive to the same kind of group of people that we were looking at with Diet Coke, right? So I'm going to take a little bit of a closer look into Kava, but at least from what I've witnessed in my daily life, I know a lot of people who are consistently going to Kava. Of course, it's a relatively newer kind of brand, but we'll follow through with that. We'll definitely speak about that tomorrow. Of course, you have Hims coming up today as well. This is super interesting stuff. I did not take a position in Hims at all yet. I believe you're bouncing back up today. Okay, we went to a low of 43.81, but of course you had a massive sell-off on Friday. What's going on, in my opinion, with this is your companies that have seen really rapid growth recently, everything's kind of pulling back a little bit, right? Your companies that have seen very rapid growth and are much more dependent on future rapid growth are going to be hit far harder, right? So you're looking at things with Hims like that, Nebius, things that essentially are just a little bit expensive. You know, I think there is, I mean, you're looking at HIMSS, the P of 111, right? This is fine when everything's going swimmingly and there's no fear of illiquidity. We've even seen this be fine in environments where capital cost is elevated, right? What I kind of believe going on here is Trump is kind of injecting a little bit further uncertainty into the market beyond just the tariffs, right? Which we already saw was causing a lot of fear of illiquidity. But, you know, we'll talk a little bit with the bonds, right? And I'm talking technically munis regarding the railway in California. That's going to be Los Angeles to San Francisco. He's thinking of clawing, FDOT in particular, is thinking of clawing back a lot of those funding. But there are municipal bonds that are tied to that, and that can freak people out substantially. You know, in my opinion, I think that makes people kind of scared. And they say, hey, you know what, I'm not sure what's even going on with something as, you know, relatively secure, right? I say, as something like munis, right? Now, of course, this is federal funding. They can't obviously rescind the municipal bonds. But, you know, when a lot of that project also is being funded by federal grants, you know, you get a little bit of a problem there. So I think that is adding a fear of illiquidity into the market for sure. Additionally, another thing that I think is making people kind of sell off a little bit, especially in your really high growth stocks. I mean, of course, like, you know, you see Palantir coming off. They're just more sensitive, right? Because they've been more sensitive to the upside, and that is kind of to be expected, right? You're still trading at 477 PE, which I think is very expensive for this stock. I would venture to say I think this might go even lower. You know, it's the same kind of theory I have with Tesla. I just don't think it has that energy yet to really grow exponentially. So, you know, we'll talk a little bit more about Palantir at some point this week, kind of how some of the revenues they had weren't really done or weren't really achieved via operations, which I think is a little bit sketchy. Of course, I think you had a really large kind of hype on it surrounding earnings. And of course, they're very dominant, right? I mean, they're going to stay around even with the decrease in funding for the military, as Trump is kind of suggesting. You know, I don't think that really should have resulted in the sell-off for Palantir. I think what that says is that there's a ton of money in being used to fund the military that's not being used very efficiently. It doesn't mean you get all this stuff cut. I mean, Palantir and its Maven system is so necessary. We are still going to build out these drone systems that are going to use Palantir AI. You know, I'm looking at Red Cat in particular. So I think that has staying power. But I mean, this thing has run up strongly over the past few months. And it's still very expensive. You know, I think you were just starting to get kind of analyst acceptance on it. As of recently, of course, you had a lot of Congress people buy this stock as well. Not that that necessarily matters, but it just kind of shows you that the taste for it is kind of expanding a little bit. Well, hold that thought. We're gonna have Steve Rhodes on next segment, and then we're gonna go back a little bit to where we're talking about that could be causing some fear in the market after we have Steve on. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes of Mastering Probability. Of course, he also hosts the Trader's Edge Show on 11 a.m. Eastern Time right here on TFNN. Strongly recommend checking both of those things out. I've got to say, you know, I read these newsletters every day. The Mastering Probability issue from this morning was fantastic, but then he also just had an update as of 2 p.m. and I was reading through that a little bit earlier once it dropped, and this is just, it's some fantastic stuff, and I really recommend checking it out. You can go to the Newsletters tab right on TFNN.com. You can see right there on the top right-hand side, Mastering Probability newsletter by Steve Rhodes. Strongly recommend checking this out. Very thorough. I love the write-ups he does. For me, when I'm, trying to decide what kind of position to take or what move to make, I really want to know kind of all that I can about it. And Steve does a very good job of putting a lot of good stuff in his analysis. Steve, how are you doing?
And thanks for those kind compliments.
Absolutely.
You missed the last night's newsletter, though, that I sent out before the futures opened, where I suggested to clients that expect or anticipate a rally, and that was because of that one-day rate of change above plus 10%. Yep. There's little nuances, little tricks that are out there, and everybody should really pay attention to this, because when the markets are really cascading to the downside, and you have a one-day rate of change above plus 10%, that would be the absolute worst time to try to jump on board that train and take a position. Instead, what you want to wait for is some type of counter trend move, which is what we've got going on today. So I just thought that I would throw that one out there.
Fantastic.
Because I did send that out before 6 o'clock at night, so the traders can anticipate, what they were going to see. When I was last on with you a couple weeks back, you had asked about the S&P 500 and how it was trading in major currencies or currencies just generally. So I thought we would really just kind of start there.
Absolutely.
If that's okay with you.
Absolutely.
Perfect. So, and it's really kind of apropos, because as we know, the S&P 500 made a new all-time high. Now we're looking at weekly time frame charts out here just to get rid of some of the noise. So we did make a new weekly all-time high last week inside the S&P 500 in terms of U.S. dollars. But we also made new all-time highs last week in terms of euros, Swiss francs, and Chinese yuan. And it's really important, folks, to understand how the market is trading in our major currencies, because that's when you have real bull runs. At the same time, if they all top at the same time, you've got to be careful about that, because that's when you can see some of the biggest moves to the downside. So this chart, weekly chart for the major currencies for the S&P 500. Any questions there?
No,
Jake?
no.
Okay, so if we take a look at how markets make major tops out there, and I've gone through this before, I sized this down just a bit so it's a little bit easier. And what I've got out here, the white lines represent the tops. Again, this is a monthly time frame chart that we're looking at, and so this helps us to identify globally what takes place when a major market top takes place. And that is that they're all making tops at the same time. When I say all, I'm referring to tops in Germany, tops in, for Europe, tops in Asia. And here I've got the S&P, I've got the German DAX, and I've got the Hang Seng in Hong Kong. And so those white lines are identifying tops, the yellow lines are identifying bottoms. You can see the tops and bottoms typically form all around the same time period. I also have, so I've got the 2000 and the 2000 top, the 2007 top, and then I've got the 2020 top out there, the COVID 2020 crash. We can see that the Hang Seng actually topped out quite a bit earlier than that. But even though once the U.S. and in this case here, the German DAX topped out, the Shanghai continued to move lower there. So it's just important to understand that, and I know that most of us don't really pay attention to what's going on overseas or what the meaning is or how things are trading in different currencies, but these are really how you are able to, at least myself, get my head wrapped around globally what's going on and what does that mean to the signals that we're looking at. Any questions about that, this chart?
No, please continue.
So now we were taking a look at a couple of different foreign markets. We were looking at the before we do that, actually, I want to take a look at major tops and how they're made out here. So this is my study, both of the Dow. So the Dow, I went back to 1896, but I've taken a look at all kinds of other instruments and all kinds of major tops out there. And the one cool thing is a couple of the patterns that I teach subscribers that I use on the show each and every day. One is referred to as a Rhodes momentum indicator top. TD9 count patterns out there. The buy the B point or sell the D point patterns. Wave number 7 signal. So it's basically 3 or 4. What's really interesting, and it really starts to get dangerous, is when there's 3 Rhodes momentum indicator tops, one for the daily, weekly, and monthly time frame. What that is, or what the equivalent of that is, and I'm not gonna, don't think of it as a top, but just the energy that goes with it. And think about being inside a pool with a, kind of a blow up rubber doll or ball or what have you, and you've got your legs that you're pushing down on it. You can usually hold down there for a little bit, and you get a little bit off, and then that ball comes flying out.
Totally.
That's basically what a Rhodes momentum indicator top is doing. It's stretched itself in one direction too far, and you're going to get a big splash, so to speak. So here's the Dow going back to 2007. So this is a 2007 top. We had a top both in the daily, weekly, and monthly. And when major tops form, not only are we going to do it in major markets out there, all 3 of these time frames must, at least in all the work that I've ever done, must have topping patterns out there. So now if we take a look at the S&P 500, which made that new all-time high last Wednesday.
Yes.
As a matter of fact, on Thursday, there was a bear sash candle that formed, and that confirmed to sell the D point top for the daily time frame for the S&P. When Friday ended, the center chart here, that confirmed a Rhodes momentum indicator top. We look at the monthly time frame chart, at least as of right now, November 24th, there is no top. The monthly chart is as bullish as can be, is big A to B equals CD pattern. Now, if a bearish reversal candle were to form by Friday, then we have a different story out there.
Okay.
We don't have that right now. We just simply have 2 topping patterns, one for the daily and one for the weekly. Let's see, any questions about that chart?
No.
If we take a look at the DAX, here in the DAX formed last week. It formed a TD9 count top for its daily time frame. There is no top for the weekly time frame. There is no top for the monthly time frame. The DAX is suggesting that it wants to move higher.
Okay.
So again, this whole idea about major market tops out there, we would see topping patterns inside the DAX for the daily, the weekly, and the monthly time frame. We would see the same thing inside the S&P 500. We don't see that right now. So I would conclude no major top in place. Here's the Hang Seng, which Hang Seng negated its weekly Rhodes momentum indicator top last week. That was that pattern where we push the ball down to the bottom. Shoot, that pattern got negated and tells us about a strong upward momentum move. It generated a new A to B equals CD pattern to the upside. The weekly time frame chart, then that A to B equals CD gets us up towards the 25,400 level. The monthly chart is all out bullish. So again, in the markets in Asia, they're saying no major market top. The markets in Germany, so we'll use that to cover Europe. They're saying no no major market top out here. And even the charts, if you take a look at the S&P 500, they too are saying no major market top because they're losing the ingredients. The tops for the daily, weekly, and the monthly time frame. The UK, the FTSE, slightly different. The FTSE formed a Rhodes Momentum Indicator top for its daily time frame. Mm-hmm. The weekly time frame has a sell the D point, has a Rhodes Momentum Indicator top as well. And we're in wave number 7 on the monthly chart. Now, Jacob, in order for wave number 7, it's part of the Chapman wave. It's letter G out there. Okay. In order for that to confirm a top, you have to have a lower high. So you couldn't get that until the end of March out there. I still have more if you want, but
yeah, please, Steve, please stay right there, folks. We'll be right back with Steve Rhodes. Perfect. Right after this break.
So.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. I am joined right now by Steve Rhodes. Steve is the author of Mastering Probability newsletter, and he is the host of the Trader's Edge show, on live 11 a.m. Eastern time right here on TFNN. If you've never tried out Mastering Probability newsletter, you could do so risk-free. We have a 30-day money-back guarantee for all first-time subscribers. So for whatever reason, maybe the letter doesn't work for you, you can get your money back. I'm betting that it will. Steve, before we went to the break, we were taking a look at DAX, Hang Seng, SPX. Essentially no significant topping patterns there, but potentially one in UK's FTSE here.
Exactly. And now in the FTSE, on the daily time frame, although it's not really drawn in, you can visually see the A to B. It's in an A to B equals CD pattern to the downside. Okay. That's one pattern that it's in. And so what folks will be watching for here, if this is going to form a bottom, is some type of bullish reversal candle. If we get that, then that's going to form, it's going to confirm a buy the D point pattern. In this case here, it would be a Gartley buy point. Today was bar number 7 of its moves. So there's possibility that it could also form another pattern, and that would be the TD9 count bottom. And it could do that between tomorrow and Thursday out there. So I'll make sure that I cover that during the during my show from 11 to 12 for folks out there. The downside target right now for the FTSE is going to be the 85.79 level. That's coming from the weekly chart, and that's its oscillator and change line. So I won't go through the details about what that is, but that becomes the downside target. The Shanghai, it negated its TD9 count top last week. It's going to go target. So this is in rally mode for its daily and its weekly and its monthly time frame. Again, the whole point of taking a look at the international charts, especially for their daily, weekly, and monthly, is because we know that when major tops or major bottoms are formed, they're going to be made basically together, maybe not exactly on the same day, but very close to it. We also know that when major tops are made, they will all have topping patterns. When I say they all, daily, weekly, and monthly, for each of those instruments too, whether it be the Shanghai that we're looking at or the S&P or the Dow or what have you. So if we come back and take a look at the S&P 500 for Friday, happened to also be two days to the downside. So this helps at the very bottom panel of this chart, Jacob, shows us consecutive moves higher and consecutive moves lower. In the major bull markets, we get these 2-bar knee-jerk reaction lows. Now that's what took place at least on Friday. We're getting the one-day rally. I question whether maybe this is really just more of a counter trend move at this point, and that we're going to experience some lower lows. I'm saying there's not a major bear market, major topping market. That doesn't mean the same thing as whether the S&P might rally or not, but you could expect or anticipate a 2-day rally. What's really interesting here, since December of 2023, we've not seen a 2-bar move to the downside. We've not seen a multi-month. We've only seen 1 month to the downside before the market resumes itself to the upside. That's for the S&P 500. Obviously, very strong market out here. And again, the monthly time frame chart, there is no topping pattern for it. So, like I said, I'm not suggesting that the equity markets won't pull back. In fact, I believe that they will. There are 2 reasons why I believe that they will, or at least the S&P 500 is sticking with it. And those 2 reasons are the advanced decline oscillator. That's the very bottom portion of my screen on the left-hand side out there. That's measuring the advanced decline line, and it's taking the difference between the 39 and 19 period of that. That creates the oscillator. When it's below 0, it tells us that sellers are the ones that are in control. The second element that we put together with that is Spot VIX Index. Spot VIX Index is traded above its 50-day exponential moving average. The 50-day exponential moving average is 1647. Jacob, I'm not sure where we're trading right now. Was it the 18s when I took this snapshot? But I'm pretty sure it's well above 1647. Those 2 conditions are perfect for a market that wants to move lower out here. So again, I want to make it clear, no major top, but I'm not saying that the markets won't move lower. Now, the counter trend rally that could last for a couple of days. Yes. The upside targets that I would have on it would be 60.62, 60.71, 60.87, and 61.05. These are all coming from these charts. The 60.71 is an example. You can see that as the top of the profile for both the 2-hour time frame and the 4-hour time frame. And oftentimes we get inside profiles, which both of those have. The 4-hour time frame chart has got a Rhodes Momentum Indicator bottom pattern that is in place out here. Once you get that, price should rally up towards the top of that profile. around the 60, 71 level, but we'll see overnight just how strong the markets are.
Yeah.
Now, for these charts, I came to the ES Mini. So those levels that I gave, we've moved off of the cash indices. We've moved into the futures markets because come 6 o'clock, that's what's going to be trading so people can, kind of keep their eye on the ball and understand what patterns are in place out here. Where could the downside target be for the ES Mini out there? So if I'm expecting, unless the spot VIX gets back below its 50-day, and combined with that advanced client oscillator getting back above its zero threshold level, I believe there's more downside. Where's the more downside? Well, we use these profile levels. Profiles help us identify where sellers and buyers are at, and that's the top and the bottom. So in the case of sellers, they're at 61.62 inside the ES Mini, and at 59.36 that's where the buyers are at. But there's a center line, and the center line tells us where both buyers and sellers believe there's fair value within that range. It's a pretty decent range. In this case here, that center line is much closer to the bottom than it is to the top, and there's equal amount of sellers and buyers at that center line. So there's more buyers in the group between 59.36 and 59.92 than any place else on the chart. So that would really be the target to the downside for the ES Mini out there. If somebody was wondering about where are we seasonally speaking, this is a 97-year chart for the S&P 500, and what we can see here is if you look over in the very bottom right, you'll see the 3 months that the S&P typically struggles are February, May, and September. What that means, folks, and you can just take a look at it, is we are moving into one of the more favorable time periods this next couple of months, both March and April, for the S&P 500. Now, we can also take a look at the S&P 500. We happen to be in a post-election year. And so we can go back and take a look at post-election years. That provides us with 24 years. Those are all the ones with check marks out there. And I'm doing this and try to put the charts together. I know people will take snapshots of this so they can do some of their own work on their own systems out here. If the market was going to or is going to follow the presidential cycle, that means the year after the election out here, we are in a favorable seasonal cycle that should take us up in through the July timeframe. So those are the patterns that are in place there. If I switch real quickly and take a look at gold made a new all-time high today in terms of U.S. dollars, but not in any other major currency pairs. That's a caution sign.
Yeah.
However, gold made a new all-time high today in terms of Iranian rial, Iraqi dinar, Syrian pounds, Saudi rial, Jordanian dinar. Jacob, my take on what this means is that peace talks over in the Middle East are not going that well.
I hear that.
There's some real caution out here. Lastly, I'll just say you this chart right here. This chart shows when Russia invaded Crimea, when they went into Ukraine, and when Hamas invaded Israel. It's when Hamas invaded Israel that gold truly took off. So if we ever do get a peace deal out there, you should expect a big premium to be pulled out of gold.
Steve, thank you so much. I love looking at these different movements in currency pairs. We'll see you tomorrow morning, 11 a.m. Okay, Steve?
Yeah, take care.
Take care.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We were joined by Steve Rhodes. In fact, we are still joined by Steve Rhodes. I saw him looking at Palantir. I really want to talk about that with him. Of course, you know, some of the really big equities we've been talking about recently, of course, are SMCI. We have calls on SMCI at 37. So this has really been eroding quite a bit today. Of course, you get down to a low of 50.26, you get up back around that 54 level and trading back down to 52.57. Of course, we are anticipating them reporting tomorrow. We talk a little bit more about that. Of course, we were looking at Oklo, ended up not buying the puts in it. We were looking at puts for around $30 in the middle of March, trading up about 45 when we were looking at that. Cracked down on Friday to 38. I said, hey, let's just wait for a bounce back in this because I'm sure people will want to incorrectly buy Oklo. Well, you're down even further today. We actually would have been very close to the money on Oklo. And then, of course, Palantir itself, which is what I saw Steve looking at. Massive run up in this equity. You're trading, I think, what, Steve, like 600 PE or something on Friday. We cracked down. We're at 202 billion market cap still. What are you looking at with Palantir?
Yeah, no, it's definitely had a run. So I'm glad that you actually mentioned it and pulled me back on because it's got some cool charts, especially the patterns that I discussed. But first, to answer your question, the daily time frame chart for Palantir made that Rhodes Momentum Indicator top on February 19th. That's that pattern, you know, where you're pushing it down inside the pool and finally it just explodes and it takes off. Here, now this is taking off to the downside. Wow. The very first thing that it did on the 20th, which was Thursday of last week, was a close below profile support. Close below profile support, it suggests that we have lower, especially if you have 2 consecutive days, which we got on Friday. And where the price is likely to target. So the nice thing about a TD9 count top, it's really important to understand where a price broke down and where a price broke out. And this is an objective way of using it. The TD9 count pattern is kind of like running a race. It's like running the 100-yard dash. Use up all your energy, and you'd think after running 100 yards, you'd still be good to go. No, you used up all your energy out there. And so in this case here, Palantir used up all its energy, and it looks like it's pulling back to that level where it catches its breath. And where it catches its breath is where it broke out from, and that would be 78.47. That's what the daily time frame chart would say. The weekly time frame chart, Jacob, shows a bearish engulfing candle for last week. That's the upper right-hand chart. That confirmed a Rhodes Momentum Indicator top for the weekly time frame. So you got two, both the daily and the weekly. So that suggests lower price. Now here, price is trading above profile. This is where I believe, in interpreting the message of the charts right now, that it's just a daily pullback to support. that 78.47 area where I'd be watching. And you're going to want to watch as price gets to 80.91. So between that 78.50-ish and 80.91 is where we ought to see some support take place.
Yep.
And should that unfold, what we would be looking for is a bottom pattern on a 30-minute time frame. If we take a look at Palantir, this is where it's really kind of cool because on a 30-minute basis, this stock loves these TD9 count patterns. If we take a look at a bottom that was made here, this is about 10:30 in the morning back on February 20th. It was a TD9 count pattern. What did price do? It rallied until it made a TD9 count top. It did that at 10 o'clock in the morning on February 21st. Then what does it do? It moves all the way down until it makes a TD9 count bottom at 11 o'clock in the morning today. Now, this TD9 count bottom and Rhodes Momentum Indicator bottom has proven to be very weak. Price has not been able to even take out the top of its profile at 94.90. So it looks to me like what's going to at least get tested here in the short term is that price is going to go down and go after the low from this morning at 11 o'clock. Now, it might not do it, between now and 4 o'clock, but tomorrow I'd be looking for this, and that's at the 89.30. There was 12 million shares that traded that day. So far today, Jacob, we're only 4.5 million. So price, I'm sorry for that 30-minute bar. So price is pushing lower with some lighter volume out here. But if it closes below that TD9 count bottom, that tells us that Palantir wants lower price, which we're already expecting based upon the daily and the weekly time frame chart. But the monthly chart is still strong like bull out here. So I think this is really setting up for a buy, and we just have to pay closer attention to it as price gets down towards that 80-ish area, 78 area.
Sure.
What questions do you have on these charts, if any, that I can help with?
So no questions on Palantir in particular. I was looking as well for a pullback kind of to that gap up. I think there was a lot of exuberance in this equity up until then. But I would also say sentiment-wise, and I think this kind of corroborates or at least agrees with your monthly look, I still think people are very bullish on this on the long term, right? I mean, these guys are so ingrained and are going to be even more so into our military-industrial complex. I think even with a reduction in military spending, as I was saying earlier in the show, I still think Palantir gets, what they're supposed to be getting from the military. I don't think Palantir gets cut in that way. So I think it's a very dominant stock, very dominant equity. What I am curious about is if you got anything on Oklo or SMCI. SMCI is interesting to me. I think they have a big fundamental kind of push going on, but Oklo has made, we were looking at this at 45, and I don't know if you've ever dealt with that, Steve. I'm sure you have, but you look at something, you're like, this thing has to go lower. I mean, none of this makes sense. The technicals are off, the fundamentals are off, the general sentiment is off, and you don't do it, and then you would have been so in the money, it hurts to think about,
Yeah. SMCI is kind of interesting.
Sure.
Right now, what it's doing is it's just consolidating with inside its monthly profile, and that's that chart on the bottom left. And that's between the range, folks, of 25.67 and 59.33. What you're looking for there for this to really start moving to the upside is a close about 59.33 on a monthly basis. There is nothing in the weekly chart to suggest that won't eventually happen. Nothing that I see on the monthly or the weekly chart right now. The daily time frame chart as well. The daily time frame actually negated a TD9 count pattern, and it did it in one day. It did it on February. The pattern was confirmed on February 18th. The very next day, price closed above it, negates that signal. That tells us about a really strong upward momentum move. What's gotten in the way has been the top of that monthly profile, that 59.33 level. Yes, price got above that during the month out here, but it's really the body of the candle, folks, that is truly the essence of price out there. So right now, I am expecting and anticipating the SMCI will pull back to somewhere between the 46.08 to 49.22 level. And as it's doing that, that's where we'd like to switch over to the 30-minute time frame chart to look for some kind of a bottoming pattern. If there's going to be a market turn, folks, you're going to see it on the short-term time frame charts. You'll see it on a 10 or 15-minute, a 30-minute, a 60-minute. That's the benefit of using some intraday charts out there. You said OKLO. That's the
OKLO. That's correct.
Yeah. So let's go to the OK Corral. This will take just a moment here to populate these charts. And what were you looking for there? You're looking for this to also pull back?
I'm expecting probably it's gone down so heavily right now. I'm actually kind of expecting a consolidation around this level, but I do think on a longer term this comes back to one of its big breakout areas. So roughly around like 20s.
Okay. So the daily time frame has what I refer to as a profile change in trend. And that means that it busted, in this case here, it's a bearish profile change in trend to suggest lower price.
Yeah.
It busted through the bottom of that daily profile on Friday. We've had follow through today. Now this is going to be 6 days in a row to the downside. So it is getting ready to, to have some type of counter trend move at least.
Yeah.
And as long as price remains below 42.39, I would say it's a counter trend. I think where OKLO is going and where that next buy point is going to be around the 24.18 to 28.07 level. And that's the buy zone of the weekly profiles out there. So that's what I see.
Fantastic. Steve, thank you so much for hanging around and going through that. I appreciate that every time.
My pleasure.
We'll see you tomorrow at 11, okay?
You bet. Take care.
Folks, stay right there. We'll be right back for a short segment right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was just joined by Steve Rhodes for basically the whole show, but it was fantastic. So I recommend kind of going back over all of that at the end of programming today. Our producer is hard at work getting that segment up for you all to enjoy over on our YouTube channel, Tiger Financial News Network. If you decide to do so, please consider liking the video. Please consider subscribing to our channel as it helps us out immensely. Okay, boy. I mean, we have a lot to go over. We'll do it tomorrow as well. I believe Basil is still out, so I get a nice part, beginning half of the show to do that. SMCI off 6.91% at 52.24. What are we looking at with that? We're looking for them to file basically tomorrow. Okay, I had discussed that if they don't file tomorrow, this equity will just completely crater, right? So you are kind of in an interesting situation where you could actually buy deep. I bought deep out of the money calls, and you could now buy probably deep out of the money puts and still be relatively safe there. I say relatively, of course, you're doing options. So you're getting some bigger movement to the downside right now at 7-11. You still have massive institutional ownership of SMCI. Okay, they were able to secure the $700 million in debt. About 2.25 convertible senior notes. I think this kind of edged out to about $61 a share. In what realm do you buy convertibles and you expect the equity not be able to trade on the secondary market? I don't think that really occurs very often, right? So these kind of things do somewhat indicate, at least to me, that you'll be able to have this company publish and file. Of course, do your own due diligence. This is your risk. I mean, you're dumping off pretty heavily right now. Yeah, you kind of stabilize a little bit higher off now, 7.18%. Keep moving lower. Oklo, I think we get consolidation. I think this thing craters and it stays suppressed even during earnings. We'll talk some more tomorrow, folks. Thank you so much for joining me. Come by 9 a.m. tomorrow morning for Tommy O'Brien and 8 a.m. for Al's Roberta Flack tributes. Take care.